Hey there! Are you ready to decode the secrets of the dollar yen in the H1 time frame? In this riveting video, we're diving deep into the world of smart money concept trading, transforming intriguing patterns into profitable steps. And if you're just dipping your toes into the smart money pool, don't worry, we've got your back. Head over to our YouTube channel to access our comprehensive yet absolutely free course on the subject that's beginner-friendly. So buckle up and join us in mastering the markets. Hello, I'm Oliver Cooper, representing StarseedFX. The following market analysis you're about to view has been prepared by Mohammed El-Sayed, our esteemed owner at StarseedFX. Let's kick off our journey with dollar yen. A clear bullish trend dominates the market. But what makes this particular zone an order block? To identify a high probability order block, we look for a structural break, inducement recognition, fair value gaps, and liquidity being swept. Once all these criteria are met, we find ourselves in the order block area. Now, to maximize our chances of success, we need to venture into a lower time frame such as M5 to discover a suitable entry setup. In this scenario, we pay attention to change of character, liquidity being swept, and fair value gap. Interestingly, waiting for an inducement is not mandatory here. You can directly place your pending buy order. However, remain cautious if the market continues to push upward, as inducements may form, ensuring we don't fall into a trap. In our example, we spot the change of character, liquidity being swept, and fair value gap, making it an ideal moment to place a pending buy order. As for the take profit level, it can be set at the last high of 5 minutes chart. Observing the market, we notice a brief upward surge, creating two significant retracements. Consequently, we consider this pullback as an inducement, leading us to maintain our original pending buy order. Subsequently, the market retraces entirely, triggering the pending buy order and catapults upward. To manage risk, a trailing stop strategy comes into play. Upon reaching a 1-to-2 risk-reward ratio, we adjust the stop loss to break even. As the price progresses to 1-to-5 risk-reward, we move the stop loss to 1-to-3 risk-reward. Ultimately, our stop loss is hit at a 1-to-3 risk-reward, resulting in a profitable outcome of 3 risk-rewards. If you opt not to apply the trailing stop to your trade, you could potentially achieve a 1-to-10 risk-reward ratio for this trade. Alternative scenario to M1 timeframe entry. Let's explore an alternative scenario, this time examining the M1 timeframe. Here, the market taps into the order block zone once again. Following the same principles of change of character, liquidity being swept and fair value gap, we observe all the necessary elements. Unfortunately, the pending buy order is stopped out. However, a subsequent market push upward provides a fresh opportunity for a new setup and another buying attempt. By closely observing the market, we can notice 2 retracements during the upward movement, signaling a potential buy setup. In this scenario, we can identify a minor break of structure and inducement, liquidity being swept, and a small fair value gap. To capitalize on this opportunity, I will place 2 pending buy orders. The first pending buy order will be placed here, and you can set the stop loss either at the low of its candle or, if you prefer, a larger stop loss below the liquidity sweeper candle. As for the second pending buy order, it will be placed at the extreme level. The same options apply for the stop loss placement. The take profit level will be set at the last high of the H1 time frame, and I will utilize a trailing stop strategy. As the market progresses, our first pending buy order is triggered. Once it reaches a 1-to-2 risk-reward ratio, I will move the stop loss to break even. At a 1-to-4 risk-reward, the stop loss will be adjusted to 1-to-1 and so on. In this particular trade, the price went as far as to 1-to-6, but unfortunately, the stop loss was hit at a 1-to-2 risk-reward. However, as the market retraced all the way down, it triggered the other pending buy order placed at the extreme level and then surged upward. Although the price did not reach the last high of the H1 time frame, we still managed to secure a gain of up to 1-to-13 risk-reward through the use of trailing stop. The trade was ultimately stopped out at a 1-to-6 risk-reward. Although our trade did not achieve the desired outcome, it is essential to remain resilient and embrace the lessons learned from each trade. By continuously honing our analysis skills, exploring new opportunities, and staying disciplined in our risk management approach, we set ourselves up for long-term success in the dynamic world of trading. If you're eager to unlock further trading insights and explore a range of strategies, consider joining StarseedFX. Our community of traders benefits from expert guidance and valuable resources, empowering them to navigate the markets with confidence. Don't miss out on this opportunity to elevate your trading game. Join StarseedFX today and embark on a rewarding trading journey.